Yeah, Aisha, got a crick in my neck, so got to look straight.
Yes.
So just one of those days there. No, look, my sense is very simple that the US debt ceiling, while right now it is important in terms of news, it's happened in the past also, where the US debt ceiling had effect. I mean, the US, because of political yes, no, and I don't know, where the Republicans are blaming the Democrats and Democrats are blaming the Republicans and everybody was blaming White House. The US debt ceiling has been a challenge in the past as well. But honestly, it'll go through. It may have near-term, it will give near-term concerns. It will have anxiety moments, so to speak. But from really a market standpoint, I don't think this is something which is going to be a prolonged problem. Today markets will talk about it. Tomorrow market will consider the importance of it. And I think sooner than later, everybody understands the importance of the uh, US debt ceiling, which could have an impact on the system per se. So I think from a market standpoint, this would be a headline which will keep us busy, but this is something which will not have a very large or a sizable impact on markets per se. That's my point.
In fact, here's what Jamie Dimon is actually saying. He's saying, if we can just bring up that quote from him, that markets would be gripped by panic as the United States leads towards a possible default on its sovereign debt. He's saying that an actual deficit will be potentially catastrophic for the US. He says we need to finish the bank crisis. Whatever the FDIC, the OCC, the Fed, whatever they need to do to make it better, they should do.
Okay, that'll closely be tracked, and we'll wait and watch as to what exactly happens by the 1st of June. That's the US government's deadline to raise that $31.4 trillion debt ceiling. Moving right on, as you were talking about, Aisha, our markets, there was an earnings drag, but despite that, we did manage to hold out resilient. So close to the 18,300 print yesterday. It was the small cap index actually that managed to outperform with a gain of about 0.5% or so. But interesting that we've been gaining for 3 straight days on the trot, and yesterday we put the brakes on that gaining streak. But the FII move has been absolutely commendable, resilient for 11 straight sessions. In fact, it's been the longest buying streak since the 14th of November 2022. So that FII trend, Nikunj, has been clearly supportive for the equity markets, and despite the earnings drag, we held out.
Avan, I think you had a very good April and you had a good May. It's entirely conceivable that markets may just consolidate here. Nifty may go back to the lower support levels. You may see a little bit of mid-air turbulence because suddenly the global mood, in a sense, is slightly on the back foot. So I think it's a time where markets could consolidate, and it's very healthy, because what you don't want is that you don't want a linear move in the market, because in a linear move, whenever there is linear move in the market, excesses always get built up. But I don't expect the until unless something really goes wrong in terms of a global risk-off moment. I don't think markets, even if they consolidate, the bias I think would be positive, because the more the markets will consolidate, the temptation to buy into mid and small cap stocks will always increase. See, that's how markets always move. First, the rally will start in benchmark indices, then the pivot index, which is the bank Nifty, then the ranked mid cap stocks, they start outperforming, and then it's essentially the small, and then some of the frothy names, they start rising higher. I don't think we have reached there yet. If you really ask me in terms of the duration of the rally, I think we've crossed the midpoint, but we are somewhere not, we are 60 to 70% of this rally I think is done. But the last hurrah, which is where you will see big price action and a serious price surge in some of the mid and the small cap stocks, I think that's not over. For example, railway is the only pocket where we've seen a huge price surge. I expect in the month of May or in early June, that last hurrah is still left. That last hurrah may not be in Nifty, but the last hurrah in small and mid cap stocks is left. Because if Nifty will consolidate, what will a trader think? Arey, market theek hai. Let's start buying. And I think that let's start buying FOMO, left out syndrome, catch me if you can, any other word? That small cap and mid cap rally is not done.
Yeah, absolutely. And you know, we were chatting with Sandeep Tandon yesterday, and he said, yes, the markets are closing in on an all-time high. Yes, the FII participation is back. But he said, you know what, the HNIs and the family offices are completely away from the market. No one's actually happy on the street. And I guess some of it can be seen in the kind of SIP inflows that we've seen. It's a stark dip from the month of March, what April's clock.
See, I think there are two things here. One, there is a year-end and beginning of the year allocation change which always happens. So March, April will always be different than what the previous months are. But it's still a sizable number, and it's an impressive number of about 13,000 crore. B, SIP, if you've invested in SIP from last 2 years or 2.5 years, it's not been a very gratifying experience because equity as an asset class has not generated superior return. So typically what happens when markets they start coming higher, Aisha, there are a lot of folks who say, okay, we're reaching our break-even points again, or we are reaching our entry purchasing price, should we get out? So you would actually see that adjustment happening. But the challenge is that if mutual funds, they do not give returns, and if they continue to underperform benchmarks, then this entire SIP bulge and surge automatically will come under question. So you definitely want mutual funds now to really come back with rewards of outperformance rather than just charging commission and underperforming.
Yeah, absolutely. Okay.